Hello and welcome to today's episode, which deals with the concept and meaning of control. In addition to the process of control, this episode will also highlight the important features, advantages, as well as the disadvantages of control. This episode will also throw some light on the traditional and modern techniques of control. I'm Amrita Ghosh, and the subject expert for the program is Dr. Tarannum Amir, teaching in Satyavati College, University of Delhi. Today, we will take a broad overview of the concept of control. Control is one of the basic managerial functions. It is required at all levels of the organization. Control is the process of comparing actual performance with the standard ones, identifying and analyzing deviations, finding causes of deviations, and then taking corrective action to meet the standards in the subsequent period. In the words of EFL Breach, controlling has been defined as the process of checking actual performance against the agreed standards or plans with a view to ensuring adequate progress and satisfactory performance. According to Coates and O'Donnell, managerial control implies the measurement of accomplishment against the standard and the correction of deviations to assure attainment of objectives according to plans. In the words of Robert N. Anthony, management control is the process by which managers assure that resources are obtained and used effectively and efficiently in the accomplishment of organizations' objectives. The main feature of control are as follows. 1. Control is a continuous process. This means that as long as an organization exists, analysis of policies, rules, performances, etc. will be required. Thus, it is dynamic in nature. Number 2, it reviews the past events. Number 3, control is forward-looking. This means that corrective action can be taken only in the future events because past events cannot be controlled. Number 4, it is pervasive in nature. Controlling is required everywhere. Number 5, control is action and goal-oriented. Controlling is an important function of management. In order to accomplish this task effectively and efficiently, every manager has to perform this function. A job of the manager is incomplete without controlling. All other functions of management like planning, organizing, staffing, etc. are the preparatory function of the management. But controlling makes the management or manager sure that these and other functions in the organization are properly executed. There are various benefits of controlling systems. Some of them are as follows. 1. Better planning. Better planning is possible only with a good control system. Controlling highlights the weaknesses of planning by comparing actual plans with the predetermined plans and suggests corrective steps to improve. Number 2, coordination. Good control systems also helps in coordinating the activities of complex and larger business organizations. Number 3, decision making. It also helps in taking the right decisions and at the right time. Controlling is incomplete unless and until corrective actions are not taken, and corrective actions involve decision as what action has to be taken and when that has to be taken. Number 4, employees' morale. It increases the morale of the employee because controlling creates an atmosphere of self-checking, order and discipline. Apart from the advantages, controlling system also suffers from certain limitations. Number one, external factors like government policies, technological changes, social changes, and so on, which have a direct impact on the business enterprise, cannot be controlled. Number two, effectiveness of control is reduced as employees do not like control. Number three, control is an expensive and time-consuming process. It is not easy to determine the correct standards. Number four, effectiveness of control can also be lost if predetermined standards are in qualitative terms. For example, it is very difficult to measure the behavior of the human resource. Following are some of the steps which are required in a good control system. Number one, establishment of standards. The first and foremost step in the process of control is to establish the standards. Establishment of standards are important for the operation of the control system because they provide yardsticks against which an actual performance can be measured. In other words, control cannot be exercised unless and until predetermined standards of the desired performance are established. It should be noted here that standards should be accurate, precise, workable, and preferably in quantitative terms. Standards should not be too high or too low. Number two, measurement of performance. The next step in the control process is the measurement of performance against predetermined standards. The first important point in the measurement of performance is that the performance should be measured against the criteria laid down in the standards. Apart from this, it is necessary that measurement should be simple, clear, objective, accurate, and reliable. Both aspects, that is quantitative and qualitative, should be measured. It is true that qualitative aspects like employees' behavior, their morale, interpersonal and intergroup relations, and so on are difficult to measure. But these aspects of measurement are often very crucial because they affect the company's performance in the long run. There are several methods through which performance can be measured, like personal observation, performance report, sampling, etc. Number three, comparison of actual performance with the standards. This is the third step in the process of control under which actual performance is compared with the predetermined standards. Comparison of actual performance with standards will reveal the deviations. Number four, analysis of deviations. This step is very important because it is said that only important and crucial deviations should be brought to the notice of the management. This means that all deviations need not be brought to the notice of the top management. Only crucial deviations which really affect the objectives of the business organization should be reported to the management. This concept is known as control by exception. In simple words, a range of deviations should be established and only cases beyond this range should be reported to the top management. In the words of Ernest Dale, control reports must satisfy three criteria. Number one, control reports must produce figures that are truly comparable from one period to another and from one section of the business to another. Number two, they must be coordinated so that they not only portray the results in different sections of the business, but also indicate the reasons for the results. Number three, control reports must be presented in such a form that the manager can get the bird's eye view. taking corrective action. This is the last and final step of the control process. This step includes the corrective action to be taken so that deviations may not occur again and the objectives of the organization are achieved effectively and efficiently. Corrective actions may involve revision of standards, training of employees, transfers of employees, improvement in the methods, and so on. Joseph Massey has pointed out that a manager may commit two types of mistakes at this early stage. Firstly, taking action when no action is needed, and secondly, failing to take action when some corrective action is needed. A good control system should provide some basis for helping the manager estimate the risks of making either of these types of errors. Of course, the final test of a control system is whether the correct action is taken at the correct time. Following are the main requirements of an efficient and good control system. Number 1, emphasis on objectives. Control system should be such which is based on organizational objectives. The main purpose of the control system should be to achieve the organizational goals. It should be tailored to fit the needs of the organization. Number 2, control should be understandable. Persons who are responsible for operating the control systems should easily and clearly understand the purpose and mechanism of the control. At the same time, employees whose performance is to be measured should know and understand the criteria against which their performance would be measured and how it would be measured, and so on. Number 3, controls should be flexible. Controls should be flexible enough to adapt to any change in the environment, in the objectives, plans, etc. Number 4, forward-looking. The control system should be forward-looking. It should report immediately all the major deviations so that corrective actions can be taken for the future. Number 5, controls should be timely. Control reports should be available to the management at the right time so that corrective action can also be taken at the right time. Number 6, controls should be objective. As far as possible, predetermined standards and measurement of actual performance should be specific and objective. In order to have a controlling system workable, they should be based on facts. Number 7, economical. Control system of an organization should be economical. This means that the control system must justify the expenses involved in the control system. Number 8, suggestive. Control system must be suggestive in the sense that pointing out the deviations between the standards and the actual performance is not enough. It should also suggest the ways or techniques through which these deviations can be removed. Number 9, strategic point control. Control system should concentrate or point out only on the critical deviations. This means that deviations which are important for the success of the organization should be focused upon. Management by exception is an important principle of managerial control system. According to this principle, only significant or important deviations from standards should be brought to the notice of the management. This means that instead of wasting time in controlling everything, it is better to concentrate only on those areas which are crucial to the survival and the success of an organization. It is based on the belief that time, effort, as well as the talent of the manager must be applied for all the important things, and unimportant information or daily routine matters should be handled by the subordinates. Thus, it is also known as control by exception. Advantages of management by exception. 1. It saves time, effort, as well as the energy of the managers. Number 2. It facilitates delegation of authority. Number 3. It is helpful in objective performance appraisals. The disadvantages. Number 1. It is very difficult to separate important and unimportant information. Number 2. It tends to increase the paperwork. Techniques of managerial control have been divided into two categories, that is, traditional techniques and modern techniques. Let us discuss the several traditional techniques of managerial control. 1. Personal observation. This is the oldest technique of controlling system under which managers personally observe the work of their subordinates. This is considered as the most effective method because subordinates try to give their best when they know that they are being personally observed by their superiors. The main advantage of this method is that by observing personally, the manager knows exactly what is wrong and he can take the corrective action right on the spot. However, this method also suffers from certain limitations. For instance, it is a time-consuming process and the manager cannot be present all the time. Another problem is that sometimes employees, especially self-motivated employees, do not like interference of their superiors by personal observation. In such cases, personal observation may prove to be ineffective. Number 2, statistical reports and analysis. Statistical reports and analysis are the backbone of the control. Statistical reports in the form of graphs, diagrams, and so on provide factual data and trends which help in the managerial control. Analysis of statistical data in the form of correlation, ratios, and so on are also helpful in controlling the system. Number 3, break-even analysis. Break-even analysis is another control device which depicts the interrelationship between cost of production, volume of production, and profits. Therefore, it is also known as cost-volume-profit analysis. Break-even analysis relies on a break-even chart. This chart shows up the relationship of sales and all costs involved in a product in such a way as to show what sales volume revenue exactly covers expenses. If the sales revenue is equal to the break-even point, it means the sales revenue exactly covers expenses and there is no profit and no loss. If sales revenue is less than the expenses, then there will be a loss, and if sales revenue is greater than the expenses, then there will be a profit. This method helps the management in several ways. Like it helps in determining the minimum volume of sales at which costs are recovered and beyond which profit can be earned. Secondly, it enables the management to exercise control over variable expenses. However, it also suffers from certain limitations. Like break-even analysis is based on assumption that factor prices, technology, and product mix are static. But these factors in reality are dynamic and changes with the passage of time. Secondly, it is not always possible to classify the fixed costs and variable costs. And it is wrong to presume that fixed costs always remain fixed because it remains fixed up to a certain point and after that it rises considerably. Number 4, budgetary control. The budgetary control is one of the essential and most effective tool of the management for controlling costs and maximizing profits. It includes the preparation of budgets, coordinating the departments, and establishing responsibilities, comparing actual performance with the budgeted performance, and acting upon results to achieve the maximum efficiency. Budgetary control is a useful tool in the hands of the management for comparing the actual performance and with the planned performance. It enables the management to correct the deviation occurring between the actual and the planned targets. The main advantages of budgetary control are: A. It helps in decision-making process. B. It helps in the better performance of future activities through systematic research, planning and control. C. It creates a sense of responsibility amongst the employees. D. It helps in controlling costs by reducing wastages and losses by continuous monitoring and thereby taking corrective action in time. Limitations of budgetary control. Number A. Budgets are the estimates based on forecasting. It is likely that estimates may go wrong and the whole budget will have to be reformulated. B. The system is a costly affair as money, time and energy are involved in the preparation of budgets. C. The system of the budget preparation introduces an element of rigidity in budgeting. Ratio analysis. One of the important and widely used techniques of control is ratios. Ratio analysis expresses the relationship of one figure with any other figure. It may be defined as one number expressed in relation to another number. The ratio analysis is a very important technique for management because it helps the management in planning, communication, coordination and control. Accounting ratios help in planning future activities of the business. The ideal ratio may be used for the purpose of comparison and taking corrective actions wherever necessary. The management can make inter-firm comparison on the basis of these ratios. Comparisons can also be made between the two firms in the same industry or for one firm over a number of years to measure their profitability. It helps in locating weak spots of the business and thereby helps the management in taking the remedial measures to correct the situation. Ratio analysis helps the management in determining the operating efficiency with which the firm is utilizing its various assets in generating sales revenues, which can be done with the help of activity ratios. Number 6. Responsibility accounting is the accounting under which performance of each employee is judged according to the area of his operations for which they are responsible. In other words, each employee is responsible for his responsibility centers. There are 3 types of responsibility centers. They are: A. Cost center. In cost center, a person is responsible only for the cost of the product. This is also known as expense center. The performance of the center is evaluated by comparing the actual expenses with the budget costs. B. Profit center. In profit center, performance is evaluated by comparing actual profit with that of the target profit. C. Investment center. In this center, a person is responsible not only for the costs and profit but also for the assets used in the business enterprise. Number 7. Return on investment. It is also known as return on capital employed because profit is considered in relation to the invested capital. Besides the above methods, following are some of the important modern techniques which have gained popularity over the recent years. 1. Management audit. Management audit is concerned with checking of quality of management. It is an independent and critical examination of the entire process of management. The main objective of management audit is to check whether the various functions of management like planning, organizing, directing, staffing, etc. have been properly performed or not. This will help the management to perform their operations in a more effective manner. Number 2, economic value added. Economic value added, or EVA, is a technique through which financial performance of an organization can be measured. It is a measurement tool that provides a clear picture of how much wealth the company has created for the shareholders. It is also known as the economic profit since it provides a measurement of a company's economic success or failure over a period of time. Economic value added measures the firm's ability to earn more than the cost of the capital. It combines the concept of residual income with the idea that all capital has a cost, which means that it is a measure of the profit that remains after earning a required rate of return on capital. If a firm's earnings exceed the cost of capital, it is creating wealth from its shareholders. The term EVA has been defined as net operating profit after taxes and after the cost of capital. In simple words, EVA seeks to measure the true economic profit produced by an organization. Market value added measures the level of value a company has accumulated over time. It is the difference between the total current market value of a company and the capital contributed by investors, that is both the shareholders and debenture holders. This method of value measurement has limited application as this approach is applicable to only those firms whose market prices are available. The value provided by this approach may exhibit wide fluctuations depending on the state of the capital market or stock market in the country. This is all for today. Hope you have understood the concept and the various techniques of control. We'll see you again with another topic on management. Till then, take care. Bye-bye.